Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video, I'm going to share with you guys one company that I have added to the portfolio. This is a very high growth company, is one that has been going up for quite some time. You'll be surprised because this has been on my watch list for a very long time, but I've never had the opportunity to actually add this company to the portfolio for a million reasons, and the main ones was always the valuation side of things. Now I feel like I've got an opportunity, I've added it, I'm going to share that with you guys. But before I do that, I just want to give you an overview of the entire portfolio. So there are a couple of things I want to share with you guys, and the first one is just to kind of give you the full picture. What I'm trying to do here is just kind of sort of build my own ETF, if you like, because I don't have any ETFs, Shariah-compliant ETFs right now. I really like them. There's quite a few of them that I'm interested in, but right now I don't feel like it's the right time for me to buy them for different reasons. And what I'm trying to build then is my own sort of a portfolio here of ETF, if you like, right? So if you look at this is the S&P 500. It has 11 different sectors, and as you can see, my portfolio right now has 20% in technology, 20% in financials, industrials 16%, consumer staples 11%, healthcare is 10%, materials 9%, energy 7%, real estate 5%, and 4% for consumer discretionary. I don't own any utilities and communications. A lot of the companies in there either have a very high levels of debt, which means they're not Sharia compliant, or they're not really that profitable businesses. So I haven't actually there's two that I've been interested in utilities, but they seem to be very expensive, especially because they are sort of caught up with this AI madness right now, because they are companies that provide the power for these data centers and so on. So what I'm trying to do now is look at this and say, okay, what has done so well? I'm trying to rebalance my portfolio again and look at the companies or the sectors that have done really well, and then maybe trim some of those and buy maybe the ones that are out of favor right now. And looking at this list, I can see financials, which includes, in fact, let me show you what I have in technology. Tech, I have these companies. Okay, I've got ASML, I've got Broadcom, for example, Salesforce, we've got Nvidia, we've got Qualcomm. So that's that sector. Now if we look at financials, we have these four companies. We've got S&P Global, MSCI, MasterCard, as well as Visa. Right now, healthcare is where I have issues with, because healthcare up until now has not been to where I wanted it to be. So what I've done is I've taken some money off technology side of things and added more healthcare. And the reason I'm doing that is when you look at the healthcare, basically S&P 500, it's underperforming the rest of the sectors, and I feel like there's a lot more opportunities right now in healthcare. And this, by the way, happens every single year. A couple of years ago was energy. Basically in 2022, beginning of 2023, it was more technology, because technology companies were down in 2022 so much to the point a lot of them were undervalued. That's when I bought more of ASML and so on. And right now it's more about healthcare, and it happens every couple of years, and we have those rotations from technology to healthcare and so on. And right now, because of a lot of the uncertainty with the situation with Donald Trump and the fact that he's trying to bully these healthcare companies to reduce the the prices of the drugs and so on, because that's something he promised, these companies are under a lot of pressure right now from basically the government side of things. But let's see how it goes, because these companies have a massive lobbies and they can get away with a lot of things. So let's see how that plans out. But right now, it's the issue is basically these companies are down in comparison to the rest of the sector. So I'm currently looking at energy and healthcare. Those are the two sectors I would be potentially be looking into buying more of. And today's company that I bought is in the healthcare company, and I'm going to share with you guys. But what I've done is I've trimmed a company called Qualcomm, again, little bit, not too much, because the growth side of is a great company, it has a really good financials and everything else, but the expectation moving forward for this company is very cyclical business. So in 2026 they're not expecting much from the company, which I think will give me an opportunity to buy the stock even cheaper. So by the time we get to 2026, people realize it's not going to do well, sell, or whatever reason, I might have an opportunity to buy it slightly cheaper than where it is right now. So right now I'm still in the green. I still own a little bit. I'll tell you exactly how much of it I own, but I'm planning to sell the rest of it and sit back, and if it bounces back, then fair enough. If it doesn't and it falls even more, then I'll buy back this company. And the reason I want to trim is nothing to do with basically the company being absolutely horrible or whatever. It's sort of speculating it will come down because of this. Again, I'm not a speculator, but this is exactly what I'm doing. And remember, don't follow me into this, please, because anything can happen. We've seen a couple of years ago where the company was done so much at the one point, and they were expecting negative growth, and the following year it was growing about 10% or whatever it is because of AI and everything else. So the company that I've added to the portfolio is Eli Lilly. You might be thinking, what on earth is going on here? Hear me out. Eli Lilly is down actually 18%. And on the day they've reported, they've actually had a good report overall. Okay, if you've seen basically what they've reported, you probably would not think there's anything wrong with the company. One of their segment or bit of the business was down slightly, okay, less than 1% quarter over quarter. But look at the rest of them. Basically, the rest of the drugs that the company has is actually done up really well quarter over quarter and year over year. Look at that year over year growth for 68% for Mounjaro, for example, which is there now becoming one of the most popular drugs. Everything you look at basically is sort of doing really well, but the issue was, okay, and I'll tell you exactly what it was. It's something to do with the data that they've released about a pill that they're actually making, and I'll just play a short video from the CEO talking about this.
Eli Lilly reporting second quarter results just a few minutes ago. The stock under pressure after trial results from its oral weight loss drug disappointed investors. Joining us now, David Ricks, Chairman and CEO of Eli Lilly. Also on set is our own Angelica Peebles, and thank you for coming on this morning, by the way, David. And I'd like to hear your analysis of what's happening, because I don't know, 12%. If you're not over 300 pounds, that's about what I'd want to probably lose. So why the disappointment, do you think, on the results, in your view?
Well, we're not disappointed with these results. It's right on thesis for us. Remember at the beginning here, when we started working on this project and when we talked about it, the goal was to create an oral pill that was convenient and could be made at huge scale, right, really for the mass market, and had weight loss that was competitive with other single-acting GLP-1s. And that's what we've achieved. Remember, the first study in diabetes, probably the weight loss is a little higher than people expected. Here, maybe it's 1 or 2 points below what Street had, but it's right in thesis for us. And as you point out, people lost 27 pounds. And for most people who are overweight and want to improve their cardiometabolic health, that's in range of what they want to achieve. So we're excited by these results. And as we say in the press release, we're going to go ahead and submit this to regulators toward the end of this year, and hopefully this time next year begin to get approvals around the world.
So that was one of the main reasons why the stock was down, is because of that data disappointed slightly than actually what they were expecting. But they're still going to submit it. They're still going to go ahead with it, and let's see what happens. And again, it was nothing to do with basically what they've reported, the sales that they made in that quarter. So it's more to do with the pipeline of basically drugs that the company is still coming up with. So let's see how that goes. I don't think that is a huge news, but it gave me and other investors an opportunity to buy a high quality business at a discounted price. So let's see what. So then they've asked him. So basically, the CNBC report basically asked this the CEO about the sector itself and where the company is sort of heading. So let's watch that.
Stock pricing.
Well, the whole sector is down. The PE multiples for the whole sector have compressed in the last year. So there's some macro we can talk about if you want, affecting healthcare and drug stocks. But for Lilly, I focus on how do we make the company more valuable to patients, more valuable to investors. And if I just go year over year, the company's undoubtedly more valuable today than last year. Why do I say that? Last year we were asking questions about what's the ultimate market potential for these drugs. And we can talk about earnings in a minute maybe, but you look at the print we just put out, and sales are up 38% year over year in the quarter. Tirzepatide, which is Mounjaro and Zepbound, will likely become the best-selling drug in the entire industry, and it's really its third year in the market. And we've got a lot more coming in the pipeline. And drugs like orforglipron, where we have data today, last year it was a question, was it going to be safe enough? Could we discharge safety so that we could have a medicine for the masses in obesity? Remembering that today we're probably treating 2 or 3% of the world's population with this condition. There's 1 billion people on the planet who are overweight or obese. And the tool to do that is an oral solid drug like orforglipron. And we've just charged a lot of the safety risk, and we're saying today we're going to submit to regulators. And the rest of the pipeline's developed nicely as well in that time. So I feel good about the value of the company. Investors have to decide for themselves what they think. But, you know, Lilly's rolling. And you look at the beat and raise today, strong growth on the back half. We're excited about the future for our company and for patients who need our products.
So I really like what he just said there, and it's important to think about the bigger picture, because sometimes you just hear the news of basically some, on CNBC, someone basically talking about a company that's been just reported earnings and absolutely amazing, but because of the disappointed data from a drug that they actually on the process of making, and the stock goes down 12, 13, 14, 15%. And people just see that and then like, oh, shall I sell it now? In the amount of time I get messages from the community members who are freaked out because of the stock went down. I'm like, why did the stock go down? Do you know the reasons? And were you expecting something like this to happen? Because sometimes when there's few companies, like for example UPS, when they reported last earnings, I expected them to improve, but I didn't expect them to actually go higher than that. Same goes for Procter & Gamble, because I looked at the earnings expectation moving forward, and I didn't have a massive expectation unless the company came out with a massive news. I knew either they will go down 2 or 3% or maybe stay the same as they are. So you will have to do these things as an individual investor, and that's exactly what I've done. So let's have a now look at the company's financials, just to see if this is the type of business, tell you the reason why I bought it and why maybe some of you might be interested in this company. So again, it's almost over, closer to 600 billion market cap, so it's a huge company. It seems undervalued at this point in time. The dividend is quite small, less than 1%. It's a very safe dividend. A+ rated is when it comes to the credit rating, so you don't have to worry about debt levels and so on. Payout ratio very, very low. So the net income of this company is about 35% of that net income they're using to actually pay us that dividend. They increased that dividend 15% basically recently. For the last 5 years about 15%, last 10 years about 10%, which is really nice. You can see that growing nicely. 10 years of increasing that dividend. $6 is what you will get for every share of this company that you own. It seems undervalued. If you look at, for example, here, we always say that blue line, if this dot line is basically below that, the stock is undervalued. So seems right now is undervalued based on the dividend theory. Now looking at the dividend yield side of things, so over the 5-year average is 1.1, so it seems slightly more expensive. It's supposed to be higher, but when you look at it, basically the forward PE sort of a thing, 37 PE, but right now we're looking at about 23. So the last 5 years has been averaging about 37, and right now we're looking about almost a 23, 24, which is very, very low for this company. Now we've seen the payout ratio. Look at these earnings per share. So from $3.43 to right now 27. So that's a massive growth. A lot of that is expected because of the the GLP-1s drugs and so on. And look at this here as well. The basically shares outstanding has been declining every single year for the last. Actually, they've increased it 2 years ago, but then they've actually bought it back again, which is nice to see. Total sales. Look at that. Basically every single year heading the right direction, even including the COVID time as well, because of course the drug companies did well that year. So yeah, it seems really well run company. Return on equity is doing well, 86%. Return on invested capital 31%. Operating margin 43%. Free cash flow margin is slightly declined. That's the only problem I have with this company. They have a negative free cash flow currently, but I think that's not going to last in the long run. Now, one of the things that I want to do now is to look at the valuation. Actually, before we look at valuation, I'll tell you exactly one of the main reasons why I bought this stock, and this is the earnings expectation moving forward. So if you look at, for example, at 2020, if you look at 2025, we've got 32%. By the way, for some reason, this website, which has been annoying me lately, Seeking Alpha, but hey, Let's see what happens. I'm not sure why it's not loading up. But let's move on to fast graph, because we have here 72% basically expected in 2025. So by the end of this year, in terms of earnings expectations. And when it comes to 2026, 34%, basically 4%. And there's a lot of analysts looking at this. So 24, and basically 19. So that's a massive growth for this company. But what I want to show you now is, here we go. So 71%, 35%, 20%. 3%, 14%. So every single year, basically, year over year, they're expecting the earnings to grow high double digits, which is really good. Revenue is more or less the same. And this is one of the reasons why I really basically like the company, because from basically 60 billion in terms of revenue to in 2030 over $100 billion, that's 40, like 110 billion, that is, by the way. That's basically, that's huge. You know what I mean? That's one of the main reasons that I really like the company. Now, with Morningstar saying it's 2 stars right now, that I think it should be updated by now, because it is now fairly valued stock if you think about it, because 630 is where it's at right now, 650 is where they think it should be. So it's slightly cheaper than actually where they think it should be. So this will probably be updated soon enough. But overall, it seems cheap in here. Let's go back to fast graph and see what we're thinking about this company. Historically, I want to show you where the company's been. So it's been absolutely fine below that orange line, which is what we normally see. And this, by the way, gold line is the dividends as well. And then we got to 2013, the stocks start becoming overvalued. And since then, it's been overvalued to the point where, wow, look at that. Just look at that. Imagine if you bought it around here and just hold it up until, let's say, to the where is the highest has been there. You would have made your 1,000, $10,000 invested will have become $178,720, which is absolutely massive, of course. But then again, it's this is why sometimes I say it's better to buy a high quality business and hold them for a very long time, because it's, as long as you're comfortable with what the company is averaging, like averaging about 12% every single year, what else have you got to worry about? If we reduce that, look at the last 10 years, about 24%. But when we do the last 5 years, the company has got basically become better and better as the time goes by. And as you can see here, the forecast moving forward, if you bought this stock right now at this price, your 10,000 will become 20,373. That is based on this 33 PE, which I think if we go back here, the forward PE for this company, what is the PE? This website is becoming absolutely rubbish. Now, let's go back here. The forward PE for this one was basically 23. So if we are looking at 23 forward PE, and right now, we're saying about 33. Even if we go with that 23 forward PE, you will still be making at least 16% every single year for the next whatever years. If we use the normal multiple where the company has been trading over the last whatever years, which is basically that 40 PE, right now if you bought this stock, you will also be making about $24,333 on your money, or almost to 45% per annum, which is absolutely huge. Now, I kind of expected in sort of in between that, really nothing closer to maybe this. So if we use the normal estimate, which is about that 33, even about 24, 20 whatever PE, even if we can make about 23 per annum, that will be absolutely total return, by the way. That is total return, annualized total return of 23%, which is absolutely huge if you think about it. So I had to compare this with Qualcomm. Qualcomm is not there right now with this sort of a growth. If I hold this company for the next 2 years, I could potentially make this up, basically that sort of money. And that's one of the reasons I've added this company to the portfolio. And if I can show you right now, I bought it on the day where it actually was down a lot. My average is 651, just down about just less than of the 4% right now, or £485. I only bought 3 shares. I'm gonna try to dollar cost average into the company as much as I can in the next few months. My plan is inshallah to build have a at least a 5%, so it becomes 5% of my entire portfolio. That's the aim, inshallah. I'll let you know how that goes. The next one I wanted to share with you guys before we finish the video is Qualcomm, which is still here, by the way. I've still got 1,250 pounds left in there, about 12% up on this company. I was buying when it was $125 per share. I genuinely think if things continue the way they are for this company and they don't report like good earnings or whatever for the next couple of quarters, I could potentially buy it back around the same price and take that profit off the table. So that's my sort of a gamble, if you like. But overall, genuinely, I'm happy with what I've done with this company. I can see how, you know, where this company is heading, and the fact is I now own both of them. Let's not forget Novo as well as Eli Lilly. So whoever does the best, I'm in there. Okay, I know Novo will come back from this. That's not going to be the end of this company, I promise you. And so what I'm doing now is adding more to the pharma company. So Eli Lilly, Novo, and Merck, all three of them. AstraZeneca, I feel like is overpriced maybe right now and fairly priced, but these three are still undervalued, and I'm going to continue buying them inshallah in the next few months. This is me sharing with my journey with you guys. If you are enjoying this type of content, don't forget us to basically join us on the Patreon account, where you get access to a lot of things, including all the buys and sales that I regularly make. And on top of that, you get basically the subscriber portfolio reviews and so on. So if you're enjoying this type of content, please share with your family and friends. This is all for free, genuinely. You don't have to pay me a penny to actually watch these videos. It takes a lot of time and effort to do these things. Just like the video, subscribe to the channel. That will do me good. Yep, that's all I need from you, inshallah. Have a wonderful day. Assalamu Alaikum.